All right, this is Dell Technologies Incorporation. So to start it off, we're going to start about a summary and investment conclusion. So with Dell, Dell is an American multinational technologies company that designs and sells computers and softwares. You might know of Dell. I have a computer that is Dell, and it's a very popular computer company worldwide. So first, this guy is Bill Scandell. He is the new leader of the global sales and customers operations, which has unified Dell's enterprise and commercial sales organization. Scandell has discussed about how the company's overall market share percentage is currently in the low 30s. With him taking over, he wants the market share to be in the higher 40s or 50s throughout the world. Dell has surpassed HP and PC shipments in the first quarter of 2020, which is very big, and they currently are sitting atop of computer companies. In 2020, Dell Technologies had a total revenue of $92 billion. Future projections of 2021 and 2022 jumped to $99 billion and over $100 billion in revenues. Once again, these projections are large jumps due to an increase in computer PC software and storage sales increasing from things like the coronavirus pandemic. A lot of people have, bought more computer PCs and softwares to work from home and be safe from the coronavirus pandemic. Dell's company strategy is advanced sustainability privacy. They are focusing on global sales, and increasing the ability to transform the workforce into a reliable and more efficient way to get work done. They want to simplify the way people use computers and PCs and, help people out. They do a good job with that. And go to the next slide. So business summary. We talk about business summary. Dell, like I said before, their support divisions are the top of the PC computer technology industry. They have a great training and certificate services for customers who are looking to get involved in IT and also just learn more about Dell and the computer and the PC industry. We could talk about how this picture, you have an older computer here. We're talking about the computer lifestyle, the personal computer life cycle, is mature. As this computer was first introduced in 1981 by IBM, who is a competitor of Dell. There are other companies apart from Dell that are competing with them, like Apple, IBM, Acer, and Microsoft are a few. Most of these companies control most of the market, large portion of the market. As we know, in the 21st century, people rely heavily on computers and personal computers for businesses and work. A lot of people work from home on their computer. As we are here at Coastal, we've been on Zoom, so we rely heavy on computers, so there's always going to be an upside in the market for companies like Dell. So computer technology innovation is always increasing every year. Better technology, better computers, better software with a smaller, more mobile computer that people are able to access and use basically anywhere virtually. Like I said before, their summary, Dell has an excellent customer base and customer service with top computer technology. They are easy to talk to and get to if you have any questions about the computer, and that's why people like to buy Dell, and that's why their stock has been so good and increasing every year, because it's easy for customers to, buy the computer and have an efficient computer that they can use. Um, that's why they're such a successful company in the market. Um, so start out talking about the market. Um, Last year, a competitor of Apple had a total net revenue of $89.6 billion, and their current stock price is Apple is sitting at 131.46. You know, which is a lot higher than Dell's right now, as Dell is sitting at $98.33 per share. But the value of Dell's stock is $142.44 per share. That's a 35% undervalue of the company, which is good considering, people are undervaluing Dell and its services. And as you can see here, these pictures show that, it's very easy to get in touch with Dell. It's a very versatile computer. People just enjoy it. People just buy Dell, and they've done very successful. All right, so we're going to talk about risk here. Risk within a business. Talk about risk score. So Dell has a risk score currently of 8. So that means that the company is significantly less risky than other tech companies. We talk about risk score. 0 corresponds to a high risk company. So anything around 0 is the company has a lot of risk, and 10 being the low risk company. So Dell is sitting really good right now with the risk score. Yeah, so Dell is still in debt. They have debts on, liabilities and everything for the company on the balance sheet. But debt is a tool that helps companies grow. People think of debt and, it's not a great thing. But as long as the company can pay off that debt and get out of that debt, that is all that matters. Debt grows the company and on the balance sheet. So as their assets continue to grow, they can pay off those debts. So with risk, we like to look at EBIT too. Some terms, which is earnings before interest and tax. So Dell's EBIT was $2.622 billion. EBIT provides the company with a clear idea and understanding of earnings for a given year. So EBIT's a very important tool to use for risk. Dell's EBIT has grown at a steady rate of 331% over the past year. If it continues to grow at a successful rate like that, the debt will be shed from Dell in no time, which is very important for investors to look at that and understand that, it's a good time to get into Dell and buy. They have a lot of assets and their revenues are continually to go up, with great customer service as a company. And Dell is just a great company that is in the technology industry. All right, so we're going to jump down to valuation. By understanding the valuation of Dell, we first like to look at the present value of future cash flow to calculate future value of the company. So, cash flows throughout the company. Present value is the net worth, the current worth of a future sum of money at a specific rate of return. So Dell's present value of cash flows for the next 10 years is $49 billion. We need to understand that, today's value of that present value of that cash is not the same as the future value. So after that, we find present value. We need to calculate the terminal value of Dell, which terminal value is the value of a company beyond the forecasted period when future cash flows can be estimated. So basically, terminal value is how much a company will grow at a set growth rate, which is very important for investors to understand. Calculating the terminal value, I used an annual growth rate of a 10-year U.S. government bond yield of 2%, while using today's value at a cost of equity of 11%. The terminal value of Dell is estimated at $124 billion, which the company has a good value to buy. This is if I am telling my investors to buy this stock right now, as it's currently sitting at 98.33% dollars per share, with a fair value of the company at $142. So that's a 35% undervalue, like I stated earlier. This company has grown. Last year, May 2020, company stock was at $43 per share, just over $43, and now, like I said, it's 98, up around $98, and hopefully it's going to continue to grow. So that's a very exciting stock with tremendous. Dell is a very exciting stock with tremendous upside and stock potential upside. So this is a great buy. As we see down here, this is the picture of the stock growing. So this is from, looks like June here to March. So as we see, this stock has grown significantly in the green. Like I said before, this is undervalued. I had a great chance to read a lot about Dell and learn about it, and it's just a great company that investors should really be excited about and buy, because you can make tremendous upside on Dell, as we've seen. It's gone up just about $50, $53, $54. So it's been increasing great. I'd like to talk about also, future ROE, return on equity for Dell is forecasted very high. That's at 44.2%, compared with the industry average of return on equity at 8.4%. So, as you can see, they're ahead of the game in the industry. They sell the most computers. It's the best return on your stock, for the industry. And they're continuing to go on the upside, as I stated earlier. Bill Scandell, the new leader of the global sales and customer operations, is looking to really kickstart the Dell Technologies worldwide, get people involved, and help out the great customer base. Most customers stay with Dell. They like the customer service of anything needed. So I'm recommending that this is a strong buy. This stock has tremendous upside. As we've seen, it has increased just over the past year, and it's grown so much, and they're going to continue to pay off debts, outstanding debts, and assets are increasing as revenues are looking to skyrocket over $100 billion. So, and with the coronavirus pandemic, it's a great time to get into it, because people are staying at home, working from home on the computer, and always needing new computer software. So Dell is right there to take over that. So thank you so much, and I hope you like to get involved in Dell. It's a great stock to buy right now at $98, and it'll have tremendous upside in the future. Thank you.